Hey everyone, John Henry here, slingshotfutures.com, and welcome to the Daily Futures Market Outlook, where we take a look at our big six markets, the Bund, Euro, Gold, the bonds, crude oil, and the S&P 500, and formulate an attack method for tomorrow's trading. And tomorrow is going to be the 21st of April, finally Friday, going into the end of the week, on a relatively kind of rocky week. Monday, Tuesday were a little bit kind of iffy, Wednesday was really slow, and then Thursday today, while Wednesday wasn't so bad if you traded crude oil, but now today we're getting a bunch of movement again, so it's kind of nice to see things liven up a little bit going into the end of the week. Now, before we jump in, as always, make sure to swing on over to the website, slingshotfutures.com, scroll down and click on the Join the Daily Outlook newsletter. That's going to add you to our email list so that you'll know every single time one of these videos comes out. That way you'll never miss it. We also talk about different statistics, different stocks that we're keeping an eye on, all kinds of good stuff in the Outlook newsletter. Along with that, at the bottom of the page, every single day, we post a market psychology video where we talk about and rip apart one specific market and figure out why it moved, right? What makes it tick, if you pardon the bad pun. And then along with that, in the morning session, at the bottom of the page, we have our live trade room morning prep levels every single day for the big six markets as well, so you know all of the major levels of support and resistance. Now, if you haven't done so already, make sure to swing on over to the live trade room subscription and trial info and sign up for a day trial. See what we're all about. And if you really like it, you can subscribe for either a weekly or monthly option. And if you really enjoy it, you can become a member, which has the live trade room all part and parcel to the entire package. So you don't have to worry about paying anything ever again. Now, looking at the Bund overall, very bearish, right? We started off the day with a big drop lower, and that dive lower, this is what we were talking about on the zoomed out picture yesterday. With this amount of movement to the upside, it just feels like it's overdone. We need a correction. It's going to be very difficult for buyers to want to buy way up here and way up here, and we finally started to get that dive lower, and once we got that dive, now we're starting to get into longer term areas of interest, especially if we look at a 60-minute chart. We can see, really, this is the first correction we've had for a long time. And it's substantial, right? This is a pretty good corrective phase. And now we're starting to run into last week support at 162.59. This is a phenomenal place to begin looking for longer-term trades for buyers. So we have to keep that in the back of our mind. Even though we are bearish at the moment, longer-term traders are going to see this as a strong opportunity for long-term trades to hang on to going on for the next month or so, back up towards those highs. Now, the buyers are beginning to prove it a little bit, right? The sellers obviously dominated the morning session. They got a second leg down through a new low, through support, showing that they really own this market. That said, since that low has been put in, the sellers haven't shown back up to the party. They failed a low here, deep correction, but they didn't make a new low. They failed here, they failed here, they failed here. So at this point in time, one of two things is likely going to happen. We're going to have a push up into resistance 162.96, the higher edge, where sellers will pile in and attempt a move to the lows. If this move to the lows fails, right? If it looks something like this and then turns back up, the downside is completely off the table. We're switching gears to the long side if something like this occurs and looking to use that area as a retest for support back up to a new high. But if you do get that trap above the highs and it holds relatively aggressively, we should see something like this where we can get a drive down to a new low to finish off that move lower, and then we'll probably transition into a range from there. So overall, we have a game plan of both sides. We're able to buy and sell. It just depends on what they want to do around that area of resistance. At this point in time, might turn into support if they break out above it. The euro catching its running legs. We had a pretty big move to the upside on the euro, showing that the buyers really owning the market. But towards the end of the day, they fell apart. They fell apart pretty aggressively, right? A spectacular fall off of the highs back down to the lows. Now, this move really kind of counteracted all of that morning bullishness that kicked off at around 3 in the morning. They came back to the highs, couldn't make a new high, got a mid-peak trap, and dumped all the way back down to the lows. So with that aggression, when we zoom out and we look at that 60-minute chart, we can see that this is nothing more than just a bull channel that was here. They broke out above it, used it as support, and now they have an equidistant channel high right up top now. So we're dealing with a multi-tiered channel on the bigger picture. When we're zooming into the 5-minute chart, we're resting directly on that midline support, and this is a major area that we need to be looking for at least congestion, at least a pause, if not a little bit more juice in its tank, so that we can push back up for maybe an attempt back towards, that area around 77.10 or so. It is pretty obvious that we're getting a little bit of a wedge. It's kind of an ugly looking wedge in inside here. It certainly is not the prettiest of patterns. But this type of scenario wouldn't be a surprise at all to see a trap above the highs, one more attempt at the downside, maybe to test that prior low of day, or maybe that major 60-minute support at 73.51. But either way, the downside seems limited, even though we are very bearish right now. So if we are going to sell, all that means is that we need to sell a better price. Whether that better price is as low as 75.61 or up to 77.10 or maybe even higher, either way, we've got to wait for better prices before we go on selling. And we could even potentially look for short-term bounces for the euro to find a little bit of support on the 60 and catch a little knock higher. Over on gold, if you're doing anything but trading this as a range, you're doing it wrong. This is a solid, pure and simple, no holds bar range. There is nothing else happening on gold right now. And today, I mean, it's really hard to find an example of a better looking range than we have here, especially the low side. The buyers seem much more interested than the sellers do. So the buy side at 1279.1 to 1278 seems to be a massive area of support as well as a magnet. It continues to draw price down to it. On the high side, you've got a couple different options. You have the major high failure, which is 84.4 to 85.2, but you also have the intermediary highs around 83.3, maybe a little bit higher, up to around 83.6, and you can see that area acted just about as strongly as the bottom edge down here, up here. So this area, you've got kind of a bigger zone on the top. Either way, though, we know what to do with the range, and it's buy low, sell high, and stay the heck away from the middle. And right now, we're in the middle. So we got to give gold a little bit of time here. We are looking to fade the highs, looking to fade the lows. Now, one thing to keep in mind when you're looking at a range is the bias. Ranges always have biases when it comes to where did the market come from, right? If we zoom out on a 60-minute chart, we can see that we came into this range from the top side down. So we sold into this range where we're now holding. The problem is, this could just be a two-legged correction down, an ABCD correction, which we're all, I'm sure, familiar with, in a much larger bullish trend up, and this might just be a flag, and it looks pretty darn good to be a flag. So this one kind of has a split bias. In all honesty, given the support that we've seen so far off of the lows and the fact that we have a very large push higher and a nice little pullback, if we do get a trap through the lows, I would still rather lean on the buy side for a move back up towards the highs to finish that job off and really kind of drive that market back to a new high. The buyers have owned the long term. There's no reason to not believe them now. They're just a little bit range bound and stuck. Over on the bonds, not much to say about the bonds. Not a whole lot really happened today. We had a lot of back and forth, a little bit of chop and slop. Nice drive lower from around 2:30 to 3 o'clock this morning, and they continued that move down for the most part. A little bit of a descending wedge working its way down, getting a little bit stuck inside here, and, well, we haven't really moved out of this range that we've put in right around here. So the area of resistance, if we are going to continue this bearish move down, is going to be from 154.12 up to 154.16 or so, looking for selling pressure in there to drive the market back down. Now, I'm not anticipating a new low. It doesn't look strong enough to make a new low. Instead, I'm looking for them to push down to retest the lows right here at 28, 153.28, and then find a little bit of support again. So looking to be a seller, but preferably on a slightly better price. Over on crude oil, nice little drive lower here, and overall pretty range bound. There's a lot of chop and slop in here, and you can see what we would call barbed wire inside here. But overall, the general consensus seems to be bear weighted. Lots of buy side support every time they dip underneath this area. Lots of buying pressure coming in. But overall, we have a slightly bearish tone. So what I would really like to see is this move down to the prior low of day to be a fake out, a push back up into that 50.95 area to 51.05, retest that area of resistance at the top of the wedge, and then attempt to drive lower. Once again, I'm not anticipating a new low. I'm anticipating them pushing down to that 50.64 and getting stuck once again. So looking to sell around this area here so we can drive the market back down towards the bottom. And then finally, the S&P 500. What a bullish rally today. If you caught it early enough, I know we were talking about different option buys in our Nadex platform. We have an option buy that's actually expiring in about 20 seconds here, not too far away for our final profit target, so we'll widen that out and keep it going. Only 3 contracts on this one, but still looking for that expiration to close us out at a nice day, wrap it up at $135 here. Now, while we're waiting for this to expire here, in just a couple seconds, we're going to wrap it up there, and there we go. We get the expiration. Nice little profit banked at the end of the day, good way to wrap up the week there. Looking at the S&P, I mean, you can see this rally higher. It's no surprise why we were looking for longs in the room today, and it makes perfect sense, right? You've got a beautiful rally to the upside. All of the markets were blasting through the highs. This is the S&P. The option we were just taking a look at is on the small cap 2000. Either way, everything was hammering higher. We had a very slow start to the morning session from 6 to about 10 o'clock, but once that broke out, it was all guns firing because that thing did not stop rallying to the upside and just a beautiful rip higher. Small little pullbacks, right? Look at these shallow little pullbacks. Gives you plenty of opportunity to jump on in and ride that move up towards the highs, and, well, we did, right? Beautiful move to the upside. Now we're waiting for a pullback. That pullback could be any number of things, depending on how aggressive the buyers feel. In this case, we have such an aggressive rise higher that I have to assume we're going to get a little bit of a larger one. We have an intermediary, more aggressive pullback at 53 3/4, but honestly, I'm not a huge fan of it. The sellers just look like they're trying to get a little bit of profit taking at the end of the day, possibly a flag going into tomorrow. So I would rather see them get a fake break of the lows. One of the best setups you can get is when you get a flag, you get a break down for a fake out, and then a rocket ship back to the highs. And that's kind of what we're getting now. So in this case, you have a moderate buy area between 51.5 to 50 3/4, and if we can get a little bit more momentum to the downside, major buy support at 47 3/4 to drop the market, well, I guess rip the market back towards the highs once again. The one concern I have about pushing into new highs and really hammering into the highs is this monthly resistance that we're running into at 57.5 that just cannot seem to get out of the way. So be a little bit careful going into that 57.5 area, but either way, looking to be a buyer on these pullbacks to get that rally back up to finish the day off. So that's going to do it for the outlook. Looking at the news for tomorrow, it's relatively spread out. We've got some 3:30 news out of Germany with the German manufacturing PMI forecast at 58. The previous was 58.3. Out of the UK, at 4:30, we have the retail sales month over month forecasted negative 0.2%. Previous was positive 1.4. Then we go into the Canadian news at 8:30, the core CPI. The previous was 0.4% there. And then finally at 10 o'clock in the US session, we have the existing home sales forecasted at 5.6 million, the previous being 5.48 million. So plenty of news going into Friday and enough to hopefully keep things going. Generally, when you have this explosive of a day, you usually don't get a whole lot of price action. It ends up being kind of choppy. Crude oil is a beautiful example of this. We had that massive 250 plus tick dive lower yesterday, and today we really didn't go anywhere. That's kind of what you expect to see, and that's commonplace when you see that kind of a move. So the indices going into tomorrow, since they had such a massive rally, kind of expecting the same thing we're seeing on crude today, where they don't really get a whole lot done. Either way, as we always say, make a plan, trade the plan, follow those rules, and you'll be A-okay. Until next time, we'll see y'all then.